This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. It's the Wealth Roundup for the week of June 25th with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. First full week of summer, Patrick. Jumping right into it with the markets. What are we looking at this week?
Well, as we're taping today, Dow's having a strong day in the market, up 500 points. I think the market is shocked about this ceasefire deal in the Middle East with Iran and Israel. But really, for the past 2 weekends, the market has really kind of shaken off and been quite resilient with that news. Obviously, we've seen a whipsaw in oil prices. We had oil futures as high as $80. Oil's falling today. And so, if we were to see a continuance of kind of a ceasefire, is that we would expect oil to kind of fall back into that range it was prior to this, kind of in the low 60s. But if we look over the last month, is that both the Toronto Stock Exchange and the S&P 500 up about 2% over the last 30 days. Gold is down about 1% over the same period of time. Bitcoin is down about 2% over the same period of time, albeit Bitcoin is up today. And then bonds, bonds kind of flat for the year. So with the fear about the impact of tariffs. Like, funny thing is, later this week, we're going to get a CPI reading for April. So here we are, late June, and we're only getting the inflation numbers for April. So it just kind of shows you sometimes the lag in data means that we're flying blind on some of these things. So, but yes, we can't complain. The markets have been resilient.
You would think with the technology that we're working with today that they'd be able to get those results out quicker than April to end of June.
Yeah, it's in a way, you'd almost be a little suspicious if you're a conspiracy theorist that the lag in the data might support an agenda to, maybe either support one idea or another. But these things do follow a schedule. We get a monthly calendar of economic announcements as they hit the market, both for Canada, the United States, and the European Union. So this was something that is normal. It does. I guess what it does is it keeps people like me employed because we can come up with our own data in between those calendar dates.
We have a new federal government, and a lot of times with a new federal government comes federal government-sponsored infrastructure. Is there a way to invest in that?
I think infrastructure, I know we're getting into summer and people are booking holidays and trying to find tea times. But a couple big things on the infrastructure front for Canada. So just a little bit of a reminder what infrastructure is again. So if we think of goods as being either consumer staples or consumers discretionary, so the difference between things that we need and things that we want is that infrastructure is like an industries that we need. So think of things like power and water and oil and gas and energy and shipping. That all falls into the category of infrastructure. So on June 20th, the House of Commons passed Bill C5. Now, the concept behind Bill C5 is to remove some of the internal barriers to trade within Canada. This should open up more opportunities for large-scale projects here in Canada. And we had another really kind of notable infrastructure item this week in that LNG, the big LNG project in Kitimat, BC, is that they created or produced and basically prepared their first shipment for LNG. And that project, which was a $40 billion project, a consortium between Shell taking the lead and Petronas and PetroChina, has very much remained on target and close to being on budget. So we would expect to see infrastructure spending in Canada occur at a more heightened pace. Because, the Prime Minister has come out and said that that's going to be one of our strategies here to deal with, our perhaps change in trade relations with the U.S. I think that the Prime Minister sees it as being a key part of his platform. And if the economic environment is supportive of these type of projects, I do believe we are going to see more of them. Now, these projects have to be feasible. And if we think about the Trans Mountain Pipeline project, which was, back to 2013 was initially inked as a $6 billion project and ballooned into a $32 billion project, is that as we look at big mega projects, is there has to be an economic viability. But we would expect that the federal government and provincial governments would also be going and looking and saying, what's good for Canada? How does this translate into jobs? How does this translate into an increased productivity? How can this help bolster economic growth in Canada? But clearly, a bill and successful projects and a need. And I do think on this energy side, especially long cycle energy, is that this has momentum. And when we think of a lot of our trading partners that we deal with, climate goals are still remain a very important objective. So as we see energy build out and a desire for cleaner energy, a lower carbon footprint, I do think we are going to see more infrastructure projects that are in that particular space. And so when we think about investing in these ideas, we tend to see things again on the utility side. So pipelines, water, electricity transmission, but we also see it on the planning side. So we think of a company, even a local company here in Edmonton, Stantec. They are a world leader in onshoring infrastructure design and implementation. So there are ways for investors like us to participate in the build out of future infrastructure. And I think that this is still kind of very early days, and kind of preparing to invest there over the summer would be something that our listeners should think about.
And with the aging population that we are dealing with now, there's a lot of concern about Social Security. Well, first of all, is Social Security the same as CPP? Are those one and the same?
So great question. Two different programs. So a Canada Pension Plan, which we've talked about in an earlier call, is really employee and employer sponsored. And if you're a business for self person, you take on both of those contributions. And so very much a funded pension plan for workers, and really based on how much you've contributed and for how long you've contributed. And so that would apply to all the provinces except for Quebec. So Quebec would have their own equivalent to the Canada Pension Plan. They've got the QPP. Old age security is funded out of general tax revenue. And so it's good that we're kind of talking about it, because it is one of these programs that's in jeopardy if the government has to kind of scale back on some of their spendings. When we think of the big spending items here in Canada, we've got healthcare, we've got Social Security, and we would have things like education and deficit, interest, and maybe soon to be defense spending, because we've heard that, defense spending is going to go up. So usually to find more for one of these things is you've got to take from Peter to pay Paul. And so old age security is subject to something called the Old Age Security Clawback. As an individual's income exceeds approximately $91,000, and that would be individual income before deductions, is that now you're subject to a clawback. So for every dollar you earn, you're really paying tax on over $91,000, is that they're going to claw back about 15% of that until it's gone. A couple things that as individuals that we can do is that we can think about our source income and say, is there a way for me, first of all, to tax shelter some of that income? So that's where the tax-free savings accounts become important. So if a person has money that's earning interest or earning dividends or earning capital gains, and they haven't fully utilized the tax-free savings account, they should, because this way you can still continue to earn the income, but you can earn it on a tax sheltered basis. I think the other thing is to look at your other sources of income. Often people that are collecting old age security might be taking withdrawals from their RRSP or from a RIF. And these are plans that individuals have control of themselves. And so if there's a way to perhaps take a little bit less to ensure that you can take more to kind of keep your old age security contribution healthy, that would be key. Now, old age security is a byproduct of really age, so 65 or older. So you can also choose to defer it, which could also be a strategy. And we've talked about deferring Canada Pension Plan on the call before. But yeah, so how much you would receive is basically equal for everybody based on how long you've been a resident or citizen of Canada and your age. Kind of one of the other strategies would be looking at the investment mix between your interest-bearing investments and perhaps your investments where you've got deferred capital gains. So maybe shifting some of those deferred capital gains investments to your non-registered accounts and keeping some more of your income-heavy interest-bearing and dividend-paying investments inside of your tax sheltered accounts to keep your income profile lower and preserve your eligibility for old age security.
Again, this emphasizes the importance of working with a wealth management expert such as yourself. And it's really a shell game. It's just funny how the government keeps going into all of your shells and clawing away and taking a little portion of it every time we turn around.
It'd be nice if they turned some of those shells upside down and you could collect a little bit more.
Yeah,
Not
no
happening.
kidding. Very good, Patrick. This has been the Wealth Roundup for the week of June 25th with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. A little bit of time off, and we will be back soon.
Thanks, Terry. Enjoy your holiday.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.